Welcome to The Corner, La Source's digital show dedicated to the sport and entertainment industry. Every 2 weeks, we invite a professional to share their experience, background, and challenges. The sport industry moves fast, and having their insights is the best way to keep up to speed. Welcome to The Corner.
Hi, Michael. Great to have you here.
Great to have you as well. Thanks for having me, Sam.
So guys, thanks for being here and following us one more week. We're very, very happy to receive Michael Promann this week. How do we pronounce it, actually?
It's Proman. I mean, I feel like there's a French company named Proman, by the way. I think they were a partner of the Women's World Cup, and everyone started telling me, God, are you French? What's your ethnicity? You know, what's your country of origin? Actually, I think it used to be, just for genealogy purposes, it was Promanski. At one point, my father's side of the family immigrated, I think, from Eastern Europe, Russia area. And then when we got to the US, it just, the ski dropped off and it's just Proman. So there you go.
Made it easier, made it nice and American sounding.
Yeah, exactly. Right. You know, it's a lot nicer to say you're an American these days than maybe 3 weeks ago. So
I can't agree more. Being half American, living abroad, it is much easier. But yeah, great. We're very happy to have you. Most of our podcasts have been in French for the moment, so we're launching our new international version. So very excited to have you here as one of the first members. But if you can introduce yourself to those out there who might not know you yet, we'd love to just give a little bit of background. We'd love for everybody to know about it.
Sure. So, I guess been in the sports entertainment startup venture side for the last, call it 20 years. Started my career at big organizations, Coca-Cola, the first starting point, working in their global sports and entertainment group on properties like FIFA World Cup, the NBA on the international side, and of course the Olympics and Olympic torch relay. Just an invaluable experience working with some of the best and brightest in the world as far as global marketers. Specifically around the Athens 2004 Olympics and some of their build-up efforts around Beijing as well. And then from there, I transitioned over to the property side, worked for the National Basketball Association, helping build their global brand and business operations, particularly in Asia and China, more local. I think when I got to the league in late 2004, we had about 2 or 3 people on the ground in China. When I left in late 2008, we had just spun off NBA China, and I think the team at that point was up to 125 or so. So just explosive growth over that 4+ year period. And then from there, I decided, you know what, I've always kind of been semi-creative and somewhat entrepreneurial, and I had an opportunity to help start a company in kind of an adjacency to sport, right? Sport plus something else. And that company was called Option It. So we essentially utilized some intellectual property to make options more ubiquitous, right? More relevant to consumer-driven goods and services, and in particular sports and sports entertainment tickets. And so we scaled that business over a 2 to 2.5 year period, ended up exiting that business in 2011, worked with a few other companies in the startup space over that period of time. And then about 2.5 years ago, I got a phone call from the folks at Scrum Ventures, which is a small venture capital firm based in the San Francisco Bay Area, looking to do more in the sports and entertainment space. And it's been a really good fit for me there. What I really appreciate is that, it's a tech agnostic organization, as you know. And so it's more than just sport. And I think as I think about, what is the future of not just sport and entertainment, but just in general, I think it has to involve diverse revenue streams. It has to look outside of this vertical for innovation sometimes. And I love the fact that we're investing in companies that are solving problems that, transcend sport, and just really thrilled to be part of that team.
Yeah, that's a really interesting one, not only focusing on sport. And I think we'll get back to it because the sports tech industry is one that's very crowded, and the sports industry is a hard industry. So I'll be happy to touch base on that a bit later. But as I was preparing our podcast and going through your background, it feels like the typical resume that you would present at a business school as the success path. So what are you hiding? Like, I love to say that in my personal entrepreneurial journey, failing at the beginning of it was super rich for me. So, what are you hiding?
Yeah, no,
you can't get on without success.
There have been many more failures than positive outcomes. And I think that is, in many respects, how you figure out where you want to be and how to kind of work through adversity. I think a few things, right? I mean, you need to kind of understand that everything's about timing, right? And it's not necessarily about having the right idea. It's about having the right idea at the right time. And in many respects, I've kind of gone through that process, both on the startup side and even in my more defined corporate roles I've had, where it just wasn't the right time, unfortunately. And so, more specifically, right? I mean, look at remote work. I've been doing this now essentially for 12 years. I've been on an island. It's been very challenging, I think, in those early years. You got a visitor there. That's awesome. To be able to really validate the type of results you're able to achieve when you're not there physically with other people. And so I think it's small examples like that, right? Where you're looking at it and saying, if I could go back to 2011 or 2012, 13, and, for me to get on the phone and use this as a launching pad and be traveling and doing all these things, there's a lot of wasted time, right? And it was a lot of time me trying to convince other people that, this type of lifestyle of Zoom conversations, kind of fly in, fly out was valuable. And it was a struggle, right? It was one step forward, two steps back, and, or vice versa. I think, what's been really enjoyable for me is that I've been able to see things from multiple kind of perspectives, right? So whether it's be on the sponsor side, whether it be on the property side, whether it be on the startup side, right? I've tried to apply those learnings, those lessons into how I both manage and how I look for opportunities as it relates to venture. I think having that diverse perspective is really one of those takeaways for me that I'm just starting to reap the rewards of. And so when you ask the question of kind of where have you failed, it's in some cases because of timing, in some cases because I didn't have that kind of more macro level picture. And I feel that being able to kind of sit in different stools, so to speak, has provided a lot of those. And at the same time, I'm going to continue to fail. There's no question about it. But at least I'm going to do so in probably a much more structured way versus these impulsive kind of decisions.
Efficiently.
Yeah.
Yeah, no, that's interesting because I also believe that you're going to be based out of Asia because most of your activities are Asian focused. So would love also, just because I need to understand a bit better. So I believe our audiences, what is Scrum Ventures? What is SmartCityX? What is Sports Tech Tokyo? Like, can you help us understand how all of that coexists and how?
It's not an easy way. I mean, there's not the elevator speech here, so to speak, right? when it comes to it, because I love that, right? Is that it's not because I like hearing my own voice or talking a lot. There's a lot going on here, and we're kind of redefining or reinventing the way VCs operate and their relationships with LPs. We're looking at kind of the inefficiencies in the startup space in particular, right? And so here's how this kind of all works itself out. And you tell me, is he talking in circles or does this actually make sense? But we do what VCs do, right? That's our primary and core business. We have 3 funds. We've made 80 plus investments. We're, tech investors, but I would say tech agnostically. So we have D2C, we have B2B companies, you name it, right? We're co-investors, right? So we're not leading rounds, but everything I just mentioned right there, to be honest, there are thousands of VCs that can claim to do exactly what we do, right? And so on its face, it doesn't seem that special. But I think the secret sauce, if you want to call it that, and kind of the genesis for something bigger, and I can get into it in a second, is our LP base, right? Our LPs, for the most part, are large Japanese corporations. And that's really unique, right? Typically, it's family offices or maybe fund to fund or this or that. But in our case, these are defined brands that everybody knows. Okay, so they invest into our funds just like any LP would. Now, the difference is we're also working with them in a more day-to-day capacity. I think one of the things that our founder kind of first recognized, and I give him a lot of credit, Tak Miyata, is that anytime you're investing seed to A, which is kind of our sweet spot, right? That's a really long-term conversation with your LPs, right? It's like, hey, I'll give you a call in 5 to 10 years when there's certain liquidity events that we can chat about. And honestly, that's not a very healthy relationship, as you can probably appreciate. I think what we realized early on is that we can be more than just venture investors. We have the network, we have the expertise, whether it be vertically or just more kind of broad-based, to add value. And in many respects, we're changing the LP-VC relationship, I think, to what it should look like. It should be more of a partnership, and one in which we can add value at the business level on a more day-to-day level component, just as much as we can more strategically on the investment side. And so all of that in mind, about 3 years ago, we started what is now called Scrum Studios International. So separate entity, right? Mm-hmm. Subsidiary of Scrum. And everyone's first reaction was, oh, this is just an accelerator. And I'm like, no. You might call it a side hustle to the kind of primary business, right? And it's much more than a side hustle today, by the way. But it is a community, and it's vertically focused, right? So rather than you think accelerator, you think probably pre-revenue, early seed stage company, maybe 6, 10, 12 companies in a particular cohort, willing to give up equity to participate, willing to relocate, willing to kind of reprioritize, drop everything for a set period of time and be fully immersed, right, in this little bubble. And honestly, there's nothing wrong with that. That's called an accelerator. But what we're doing is not an accelerator in that context, right? Our belief is this, is that you can have, the two indicators to me of strong kind of growth and potential are revenue and relationships. And those transcend stages, geographies, areas of focus, right? So if you take equity off the table, you take relocation off the table, you make these programs very targeted on the value add, right? We always tell people we want to be an arrow in your quiver. We don't want to be the quiver itself, right? And being very respectful and thoughtful of their primary businesses, because in many times they're going to say to me, Michael, like, this is priority number 28. And I'm like, phenomenal. I'm okay being number 28. I don't want to be number 29 or 30, but 28 is good, and so the reality is, I think it's just a fundamentally different way of looking at things. And the value is this, is Japan in particular, Asia more generally, right, is an extremely difficult market, particularly for startups in the US and for Europe and in other areas of the world to break into. It's very relationship centric. Sales cycles are long. And, it's a long-term conversation for a lot of folks. And so if we can help create a gateway for the startup community into that market, growth market, right, through our network, our relationships, that's a win for the startups. And if you can do it again in a virtual way that is value-oriented, it's targeted. We're not trying to provide the blocking and tackling of, Startup 101. If you want that, go to an accelerator. Mm-hmm. What we're saying is we can create communities that are vertically driven, right? So gaming, electronics, sports and entertainment, food tech, and now smart city. And these aren't 10 or 12 companies. These are hundreds of companies, right? In the case of Sports Tech Tokyo, it was 159 startups from 33 countries. SmartCityX, which is one of our latest initiatives, will probably be about 100 startups. and it'll probably be just as diverse on a global level, right? So it's about looking for the best and brightest. It's about looking at companies that, again, wouldn't fit the spec of an accelerator, but understand the value we provide. And also saying to ourselves, how can we add value just to the general kind of ecosystem, right? Whether it be municipalities in the case of Smart City, whether it be corporations, people who have a vested interest in this. And those are leadership circle, or what we kind of refer to in some respect as a mentor community that runs kind of adjacent to our partners. So it's a really an enormous undertaking. We have a really talented team. In fact, probably the majority of our team sits on the studio side of our business, not on the venture side. But I like to say we're all athletes. We're all generalists. We're very cross-functional, extremely collaborative. We have a massive team in the Bay Area. We have a great team in Tokyo. I sit on kind of an island, so to speak, in Minnesota, which these days is not where you want to be. But the reality is we've found ways to make things work. And I'd like to say that we were kind of out in front of the curve on understanding kind of what different audiences are looking for and what they need.
It's funny that you say that, because it feels like you built that to get back to the hustle part, like being more proactive, more skin in the game, because that's actually the thing behind each entrepreneur, right? Like you have like having a little skin in the game, and you miss the adrenaline of not having that much. And that comes with the day-to-day pushing, where you know that you're going to hit walls, but whenever there's a victory, then there's that adrenaline that keeps coming back. And it's funny because it's somehow a little bit what we're trying to do at La Source. It's, pick quality and then push it. And, because we like the hustle side of it too. And It's not only about, trying to get money or seeing a business that, by renting a building, you actually rent some office space at the same time that you kind of invest, but try to get your money back. No, it's like literally the hustle and try to genuinely make it work. So I like that part of things. And so it makes a lot of sense in terms of why you also built Sports Tech Tokyo, right? Put this community together and actually do more than just like invest, put a little bit of money and pass a couple of phone calls. It was actually helping out more extensively, more of those organizations. And I believe that you guys must have had an interest at the Scrum Ventures level to cherry pick at some point which ones were the best ones to keep pushing more extensively, right?
Absolutely. I mean, I think, you talk about kind of rolling up the sleeves and thinking like an entrepreneur or even a founder. That's really the way we operate. I mean, like, I'm not trying to put on a facade here in my hoodie, but like the reality is this is how I act day in and day out. Okay. I look at it and say, hey, we need to kind of be part of that team. And I think when you look at Scrum, right, or you look at VC in general, traditionally between, sourcing, screening, supporting, right? The 3 S's of venture.
Yeah.
Very cliche. Now, your average VC, especially one that's a co-investor and doesn't take board seats and lead rounds, is probably going to look at that and say it's 40-40-20 in terms of time allocation and how we spend. You see, at Scrum, this is, again, goes inherent in our DNA. I would position us as more like 40-10-50, right? So we cast a wide net. We look at different verticals, different industries, different problems, so to speak, right? We're very particular about where we're kind of extracting kind of that diligence phase or kind of the screening. But then the reality is, and you can talk to any one of our portfolio companies, we definitely punch above our weight as far as check size when it comes to support. And support isn't like, let's just, lob an introduction in here or there. It's how can we really be more hands-on with the portfolio and see ourselves as an extension of their existing management team in some respect, but doing it in a very non-threatening, non-micromanagement type of way, right? Always about value add. And that's the same mindset, right, that we take over the studio side. People ask me all the time, whether it's Sports Tech Tokyo, whether it's SmartCityX, it's like, Michael, what the hell's in it for you? I mean, you're not taking equity, right? You're not taking a cut of revenue that these startups are, able to extract through these commercial relationships they're establishing in Japan. I mean, it almost seems kind of bizarre, right? Is it altruism or kind of what's your thing? And we look back and we say this, we're very fortunate, of course, to have such strong partners in Japan that have made commitments to this program and enable these programs to exist, right? But the broader mission is to be the epicenter of that community, right? To be able to be like that Match.com algorithm that's connecting various audiences and us sitting in the middle of that. We get to meet some outstanding companies through these large scale programs that we build. Oftentimes we then kind of export the conversation over to the investment side, so to speak, and participate in future rounds. So it becomes deal flow, it becomes pipeline, it becomes all the things that you look for from a venture firm, but we're kind of developing it more in-house, if that makes sense. And I think, that's an interesting mix. But I'll go back to Sports Tech Tokyo. So that program, the initial year, and we're very fortunate to be working with Dentsu in that, of course, and SoftBank and CBC and Microsoft, Itochu, you name it, right? There were 159 companies. And I have to say, in the last probably 60 days, I've probably been in communication with over 50% of them in some capacity. Yeah. And 99% of the time, we have zero equity interest in those companies. So to me, it's much more about a network. It's about saying, hey, listen, we're going to raise our hand. We're going to do the right thing. We're going to make introductions where we can. We're going to provide support. And that transcends the duration of a program, right? Yeah. Our belief is that these relationships are perpetual. The relationships never end. And everything comes back, as you can probably appreciate in life. And so we want to kind of be on the right side of those conversations. And we always want to try to do the right thing.
That's funny because it really doesn't sound like a VC approach, saying for the bigger picture. But I do genuinely believe that, it's not about the immediate win. It's about how you create the bigger, longer picture that will guarantee success for 5, 10, 15, 20 years. And that's, I think, a good, we have obviously a lot of startups who listen to our podcast. And I think that that's a great takeaway. Is that, operate fast on the low level stuff, but for the long-term picture, don't make the wrong short-term decisions that will just be super counterproductive for your business in the long run, right?
Totally. I mean, I think you look at, what has been seen as kind of a traditional VC startup relationship and how that whole thing works. I mean, the biggest pain points, I think, if you look at kind of like VCs, just very traditional VCs, they'll always say, their differentiator is deal flow or their ability to source the right companies. And I don't doubt that. I mean, I think everybody has really strong networks and are able to identify some really valuable companies. Mm-hmm. But to me, the biggest difference is anybody can write a check. Let's just be honest. Capital, very commoditized these days. And I think if you're a startup, that's a good thing, right? You need funding sources. There's no question.
US, to be fair, and I'll get back to it, but in the US, it's very true.
Yeah, right. And so the reality is everyone's like, oh, you need to take strategic money or this or that. I agree with that. But I think there is something there. The future kind of venture startup relationship, I think it has the potential of being much more of kind of looking more like a CVC, right? The VCs turn into CVCs in some respect, where there's general kind of abilities to embed technologies and make these companies more valuable, to have kind of a deeper influence. And it's not about check size. It's really about how do you get shit done when you have the capital and you have the team you need. I look at it all the time, and it's like one of the biggest pain points I see is like anybody can write a check. That's great. And then the startup can go out and go make a bunch of just absolutely awful hires, right? And it's like, well, I could just basically take that money, put it in a brown paper bag and burn it, and it'll be just as effective, right? It's the same amount of dilution. I feel that there is an opportunity for VCs in many cases to be much more hands-on in the growth and the development of these companies. And there are a lot of models, I think, that will come into focus, right, in the next 2 to 3 to 5 years in which the VC is not just seen as a funding engine, but it's seen as kind of part of the operational kind of excellence of these startups. And that there's more skin in the game. There's more sweat. There's more kind of hard work than just an occasional intro or kind of a check-in call every quarter.
Yeah. Yeah. And funny thing I wanted to get back to about Sports Tech Tokyo also is, to me, there's really the US market, quick decision, easier for a startup to really move fast and tick different boxes of, delivering important clients, getting the first contracts on the table, having a chance of making your product work. In Europe, the level of effort that's needed to actually have a contract down and the speed at which you can develop your business is definitely much slower. And my personal experience on Asia is that, as you were saying, it's very much a relationship industry where the decision process takes a lot of time. Did you genuinely manage to accelerate the process for some of those startups in Asia? Like, did your organization manage to accelerate that decision process?
Yeah, I think the short answer is I hope so. And I think there are enough data points out there as far as POCs that were established through the program itself to really say definitively yes. Anytime you're dealing with 159 companies, it's not all going to be balloons and streamers, right? They're going to be some companies that just, not to say that there's anything wrong with them, but it's just not the right time. It's not the right fit. Fill in the blank, right? Anybody can blame things like COVID, Olympic cancellation, blah, 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 right? I don't really operate on excuses. The reality is, I think we did establish some really strong ties there, but I think we did two other really meaningful things that sometimes get lost in the shuffle. Number one, we kind of, in many respects, I go back to this, we redefine kind of what an accelerator can look like. I think the biggest challenge we had with Sports Tech Tokyo when we were out there recruiting companies, and I still see it today a little bit in food tech and smart city, is that everybody's first data point is, oh, this is just an accelerator, and it's not. And I think in many respects, this is much more of a biz dev and network expansion relationship centric experience that speaks to Japan, but it also touches on so many other kind of key decision makers and thought leaders in the industry itself. And I think this has been just fundamentally lacking, right? I mean, there are great sports tech accelerators out there. Don't get me wrong. You have Stadia, you have Techstars, you have Lead, you have all of these other organizations that have kind of global notoriety. Our goal when we started Sports Tech Tokyo was never to be seen as competition to those existing entities. In many respects, we wanted to use them and partner with them for kind of deal flow. I mean, I think when I look at the Sports Tech Tokyo roster, I think 10% of those 159 or 16 companies came out of Stadia, right? So these are graduates that are looking to accelerate their business in different capacities. It's not the blocking and tackling that Stadia provides. It's just fundamentally different as far as our focus is concerned. And I think that was really refreshing to a lot of startups. So yes, you can look at how many relationships did you establish in Japan as the definitive, like, thumbs up, thumbs down in the program. But I think what gets lost here is that we were bringing audiences together within this kind of startup ecosystem, sports tech specifically in the case of Sports Tech Tokyo, that would never have had the conversations with one another, right? And we saw relationships unfold between those companies in many times, because very rarely would you see a pre-revenue or early seed stage company ever in the same room with a company who had raised 25 or 30 million, right? And being able to have that layer of connectivity, incredible, right? Never before would you have over 100 industry thought leaders or mentors coming together, many of whom, by the way, had zero expertise in Japan, but looked at this and said, well, wait a minute, this is not my classic mentorship kind of role of you need to give me 2 hours a week and you need to do this and you need to do that. We basically said to all of our kind of members of our leadership circle or mentor community, hey, listen, you can engage as little or as much as you want. Personally, I think you're going to want to engage, right? Because we're assembling such a strong, I would say, assortment of startups. And in many respects, our whole goal with the leadership circle or mentors was to provide the same amount of value that we provided to our corporate partners. We want to help them kind of essentially do their day jobs. We want to help connect them. And whether they were members of teams, leagues, or properties, whether they came from the venture community, whether they came from the corporate side, we felt that this was going to be a value add for them and for their organizations. And that's how we were able to attract really strong candidates. Again, I think the first goal when we establish things is not to do what everybody else does. Okay. I know it's kind of the contrarian approach. I'm not the rebel here. The fundamental thing is there's fatigue, and, differentiation and solving real problems, that doesn't happen when you just try to replicate it with a slightly different, font and program name. You have to be solving problems. You have to be looking more broadly, and you have to be trying to identify the inefficiencies for all stakeholders.
Yeah. Interesting. And so having done that, you moved to SmartCityX, and I believe there's no upcoming promotion of Sports Tech Tokyo, right, for the time being?
So I'll touch on that real quick before we get into Smart City. So, we concluded the STT year one program in fall of 2019. And I think, like a lot of things, right, we had ambitious plans for 2020, and obviously those plans pretty much fell apart by March. Like the world did, I guess. The Olympic postponement certainly did not help anybody's cause on that front. And, I think the other thing is that you can go on and say, hey, listen, I'm going to just plow through. Like, I'm going to just do this to do it, right? Our belief is the world has fundamentally changed, particularly in sports, right? I mean, talk about one of the industries that has been the most impacted by COVID. There is no kind of work from home model when you're a professional sports team. And so with that in mind, we knew that obviously these companies obviously need support, but we can support them in different ways. We don't have to run a structured program, right? We don't have to say that we have all the answers, because in many respects, we're kind of building the plane as we're looking to fly it. And so our belief was, let's push the pause button. Let's continue to support the startups. Let's continue to connect with our partners. Let's kind of wait for some of the dust to settle in terms of what's happening, and then look to revisit it. And in parallel, right, because we're tech agnostic, because we're not just looking at sports, let's look at other industries, right, that are being impacted, that are being disrupted by COVID. There's a lot of kind of crossover in many respects between sports, smart cities, as you can probably imagine, right? When you look at the actual verticals, when you look at, food and food tech, as well as nutrition and sport. So where are those adjacency opportunities, and ones that speak to kind of more macro level audiences? And also another kind of, I would say, aspect of the corporate community in Japan. And so Smart City, we started identifying that way before COVID as a growth opportunity. In fact, in parallel to kind of Sports Tech Tokyo ending, that's when some of those initial conversations with SmartCityX really started to materialize with some of our now partners. We kind of got to that February kind of point where it was like, we're moving forward. We've got a few partners in place. And then, of course, the world falls apart. And at that point, two things could have happened. One, obviously, everyone could have said, let's just push the pause button and reset. But I think that was a kind of an inflection point in which we said, no, this is actually the time we need to accelerate here. I mean, look at our urban, markets around the world. They're falling apart. People are fleeing cities. You have massive issues, whether it be in mobility, whether it be in housing, whether it be in healthcare. We need to kind of put a stake in the ground and kind of own this time. And so this then became kind of more of a COVID-related initiative that looked to address some of the kind of more substantial shortcommes or inefficiencies that were exposed. And then, of course, in other areas of the world, particularly here in North America, with a lot of the social unrest that occurred in the spring, we took a step back as well and said, hey, listen, how does that impact this program and kind of what we're thinking about? What is the meaning of social innovation? What is the meaning of a smart city, for that matter, right? In so many different ways, Sam. Like, a smart city is really about technologies that make people's lives better and make cities more equitable and diverse and inclusive, and things that fundamentally the Black Lives Matter movement and so many other kind of social movements, that's really the overall mission. So I think we really tried to redefine where the interests were, both kind of on a global or macro level, along with the interests of our partners, which were very much tied together. And that's where, we launched the program in August with that in mind.
Yeah, and I'm pretty sure also some of the sports tech organizations that you had been following do make sense for that SmartCityX, because that's also about eco-friendly transportation and different ways of approaching the city, and also about the health of people in those general cities. How many organizations have you managed to bring along, or at least give a lot of interest in exploring their technologies adapted to other environments? I always look at startups as saying, okay, a lot of people focus on sport. It's great because it's a difficult industry, and if you make it out, the potential for you to expand beyond sports is massive. So I always like sports organizations that have a potential way beyond sports. What was your feedback on that?
Yeah, I think, this is just my personal feeling, right? Is that some people would say sports is a very underinvested kind of category, so to speak, when you compare it to other industries. I hate to say it, but there's a reason for that, right? I mean, it's really challenging to look at, really, really good exits in sports in comparison to other verticals. I think the companies that are exiting, right, as you said, they have diverse revenue streams. They're addressing problems outside of the vertical. And so when I look at sport and sports tech, my first question for a lot of these founders is kind of talk to me about the broader vision here. Are you just trying to be, a sensor on a bat that addresses, baseball? Or are you trying to solve a more scalable problem beyond that? I mean, there's nothing wrong with a company that gets, acquired for 20 or 50 or 100 million bucks, right? But, the venture game is, I hate to say it, that's like a bunt single, right? You want to hit a home run, you got to be looking kind of more unicorn-ish. And, that's just a fundamental kind of venture type of approach. So I think in many respects, companies should be looking at sport in many respects to address inefficiencies in that space. Look, it's sexy, it's high profile, it gets a lot of eyeballs. There's no question about it. But let's call it what it is. It's a marketing channel for a lot of companies, more so than it is a primary revenue driver. And I think, when you look at some of the companies that we've brought in to the SmartCityX program, what's kind of interesting is we had an early acceptance similar to Sports Tech Tokyo last month, where we accepted 18 companies. Those 18 companies, by the way, have raised, I think, a combined almost $300 million that are very mature in some respects, but also have diverse revenue, right? I mean, we have a company that does biometric kind of facial payments. Now, you could say that's a sports tech company because the venue of the future, it's cashless, it's contactless, right? And where does biometric play a role in that experience? But at the same time, that's just as relevant to QSRs when I go in and order my hamburger or my McChicken sandwich, right? And so I think those are good examples of companies that have real world application outside of sport, but then can kind of infuse their technology into those types of settings to add a little bit more kind of oomph or marketing muscle. And so one of the kind of core areas that we're always looking for, again, diverse revenue streams. If you're a founder and you're just trying to get started, I'm not advocating that you're all over the map and you're scattered. I think what is important is you're focused, you understand how to kind of validate, improve certain areas of the business, the product itself, but to have a much more broader kind of vision for what that kind of land and expand roadmap looks like. Again, nothing wrong with sports, don't get me wrong there, but I don't see a lot of really strong unicorn-esque opportunities developing in this industry unless they're able to transcend into other verticals.
So it's funny, your take actually, and that's because in Europe, there's very much that dynamic that there might be too many sports startup. The other way around, you're saying as a VC that sport is underexploited, but it's probably because just the potential of it isn't interesting enough for a VC.
It's fundamentally dysfunctional. I mean, when you boil down to it, right? Yeah. Look at sport and then tell me how many teams, leagues, and properties are publicly traded or have greater levels of accountability, right? Yeah. I think you can count on maybe two hands the number of organizations that have public ownership. And I think that's a really interesting data point to look at, because in many cases, as you know, when you start going down the path of selling into that audience of teams, leagues, and properties with very little public accountability, right? You get employees that their legacy, they don't think innovatively, they're not being pushed necessarily by real shareholders, right? They're being propped up by operating losses that are then made up through these massive media, rev shares, right? And so it just became okay. Like, tell me another industry where it's okay to lose 10 or $20 million on an annual basis and continue to get promoted and even have a job, right? Yeah. Like, I mean, that fundamentally has been a lot of teams, leagues, and properties. Not so much on the property side, but certainly at the team level. Teams are not necessarily profitable operationally. Where they make their money is on these national media agreements, right? And so the reality is they've been trained to, pay cents on the dollar for really good technology. They've been trained to have these enormous sales cycles that are absolutely, they kill anybody in the startup space, right? And what are you chasing? Like, you're chasing, something that doesn't scale if you're a startup.
Do you actually think that it is going to shift, because the number of us out there that have that impression that they're just slow machines? Do you think that this is going to change, or do you think it will necessarily change at too slow of a pace because of the nature of sports itself, where it is necessarily the unicorn of a broadcaster because they buy those rights to really do the marketing shiny stuff, knowing that they will lose money? So, or do you feel like just the sports industry is condemned to not be able to advance at a fast enough pace?
I think there's so many different kind of aspects behind sports, right? There's the media side, there's the kind of operational side at the team and league and property level, right? And, it's not like these organizations are killing it right now, right? They're laying people off. Look at the Dodgers yesterday. They just won the World Series and they just cut a bunch of people. And it's because they lost $100 million this year. And it's not going to get better next year. Projected losses are very, very substantial. So when you start thinking about this from a startup lens, you're like, worst possible time to be selling into a notoriously cheap client, right? Somebody who has budgets slashed, who's cutting employees. I just don't see a lot of really strong upside there for a startup. Now, if you can broaden that approach, if you can speak to kind of those industries or those organizations that see tailwinds, like we have a portfolio company as well, that has absolutely killed it over COVID. And they work with sports and entertainment clients. But guess what? They're not doing it in a traditional way. They're being part of the solution instead of kind of, I would say, more or less the status quo. And so it's really interesting to kind of see the shift. Is that sustainable? Number one. And then number two, this portfolio company I was talking to told me the other day, it's like, I hate to say it, Michael, like, I don't need to spend my time talking to a team for a very, very low margin deal when I can get, 10X by talking to somebody that's not, directly in the industry, right? So, you're starting to see that more and more, which I think is a healthy thing. And maybe that's the big kick in the butt these teams need to realize. You either have to outsource the tech or get with the times. But the days of just, relying on fiscal, budgets and annualize this and, penny pinching, it's got to stop.
Yeah. Yeah, that's a very interesting one because from a European perspective, because our audience is very European, it's funny because we see Europe as being that and the US being the forward thinking, fast movers that are closer to a more sane economy. And actually, that's one thing then. Were you feeling that when you were at Coca-Cola and when you were in the NBA? Like, is it that made you go away from those organizations, like slow paced, not forward thinking enough, like you weren't seeing the change that you wanted to bring upon the industry?
Well, Coke, I mean, geez, my eyes were like super wide, right? I mean, it was like my first job, and I probably didn't know my ass from my elbow, which is very clear at that point, right?
Yeah.
I was just trying to soak up a lot of the folks around me because, I mean, you talk about people who run circles around you. I mean, I've made a career of just watching people do that, but at Coke in particular, those folks are just extremely polished, and so. I think for me, just kind of having that learning, seeing how they engage, how they interact, I got to tell you, like, it seems like, like total dream job, which it was, by the way, to work in sports and entertainment at Coke, but it wasn't about the NBA, FIFA, or the IOC. It was about selling carbonated soft drinks or isotonics or waters, right? Like there was like a real kind of goal here in mind, right? We used sport and entertainment certainly to kind of execute against those visions. And so I look at it the same way. It's like, if Coke thought of themselves as a sports marketing company, like we wouldn't be drinking the product anymore. I'll tell you that because it wouldn't be there. But and so I think it was just a lot of learnings, just kind of understanding kind of fundamentals of business and fundamentals, right? That unfortunately I don't think necessarily translate over sometimes into certain sports mentalities. But when I was at the NBA, right? I mean, I think one of the things that I always saw a very unique perspective because it's very different than a team, as you know. It's like you have the league, and the league is able to market the brand on a global level. Whereas if you work for the Indiana Pacers, right, you're kind of more sucked into that little radius around the city itself, and you're trying to sell into that particular market. And so what that exposed to me is that the thing that I got really excited about at the NBA was the global growth of the property. And I think when I got there, overall revenue, if you strip out the media agreements with Turner and Disney, ESPN, it was definitely heavily skewed, of course, domestically. International was kind of, a distant second, obviously, in that equation. But at the same time, you kind of saw the writing on the wall, right? You had, I think when I was there, we had something like 70 some international players representing 40 some countries. And just the way in which the property or the brand itself was perceived in places like in Argentina with Manu Ginobili, or Dirk Nowitzki in Germany, or Tony Parker in France, and of course Yao Ming in China, that was like adrenaline rush, right? I mean, that's like fundamentally different audience, different kind of persona than you look at it domestically. And, it's grown tremendously domestically. Like, you can thank people like Kobe and LeBron and others for what that league has been able to achieve here in the last 15, 20 years. Certainly, Adam Silver's a genius as well. But the reality is, I think the global story was it was in its infancy, right? I mean, we're talking like preseason, if you want to put it in sports terms. And to see the growth there has been really that's been the thing that it's gotten me the most excited about the league. And so I think the other thing that kind of taught me is you can kind of take that blank canvas approach in general, right? I mean, like my job with China was like, we've got kind of an idea of what we want to do, or in this growth market, we got an idea, but at the end of the day, this is a blank piece of paper. We have to go kind of create a strategy, and then we have to go execute against it. And that's essentially what startups are, right? I mean, it is a blank piece of paper. It's about looking at kind of where the wind is blowing and then saying to yourself, how are we going to get to the right place? And so I think that 4+ years in New York working at the league, it wasn't, as I said, all balloons and streamers, right? I mean, like, sounds like a great job, and it was, but it's not an easy job. And it taught me a lot of things about kind of both how to manage people. It taught me how to best identify opportunities. And more importantly, I have a sick network of former colleagues that have gone on to just incredible positions around the world, for that matter. And I'm just really fortunate to be part of that alumni group. Now, I think I hit that kind of personal inflection point at that point, where it was like, hey, listen, do you go back to school? Do you go join a big corporate? And I'm like, I don't think that's me. I mean, me is kind of like, how do I make the biggest impact I possibly can? And I just started maybe kind of, before it was cool, in investing in that network. And I'm not saying I was like an early adopter of LinkedIn or something like that, but like the reality is I probably spend more time on LinkedIn than I probably should, which is probably why I don't spend any time on Facebook. Is that, to me, like, the number one piece of IP that has enabled me to kind of do what I do is the network. It's not because of my brains. I mean, as I said, I ride a lot of coattails, and there are a lot of people that run circles around me. I think where I certainly over-index is my ability to get shit done based on relationships.
Yeah. Yeah, and that's a funny one, because it's about having those relationships, but it's also how to empower them. And I'm in that very much teaching mode, because I was with students earlier today, and it was fun to actually deep dive into that again. And one thing that is, if you had one piece of advice, and because we have to wrap it up because we had 15 more questions that we could have tackled, but we often deep dive into on topics, which is much more exciting. From your perspective, putting back on your VC hat, what do you look for in an organization to work? You said sports is great, but your vision needs to be bigger because the sports industry will only take you that far. What are you looking for in a product, and what are you looking for in the people that carry the product?
Yeah, it's a great point. I mean, I think anytime you look, we look at, high growth industries, we look at great management teams, people who are seasoned entrepreneurs in most cases, that have track records of success, and then certainly reasonable valuations. I think that's the kind of classic answer, right? So I'll give you kind of my interpretation of that as well. I think number one, it's got to be an idea and a product that you can't just have one beneficiary of, right? I think when we designed Option It, for example, our thought was, how do you provide fans more enhanced convenience and flexibility? Because that's what they wanted. Nobody wanted to buy a season ticket and be locked into a particular date at a certain time. And people still don't want that today. At the same time, you have to be thinking about everybody else. And you cannot be one-dimensional, even if your customer or client base is one of those audiences, right? And so the other audience we had was teams and leagues and properties, and it was an incremental revenue enhancement, right? And it was done with other relationships in mind. So I think number one, it's empathy. Like, I know that seems like a really overused term.
You sound like Gary Vee right now.
Oh, geez. I mean, you want to, go hug it out. That's fine. But like, at the end of the day, it's not, you can define empathy in so many different fashions. This is about being empathetic around your customer base. And I think so many times in sports, there's just this amount of arrogance, I hate to say it, that drowns out empathy. And I think whether you're a founder that's developing a sports tech product or outside this industry, you have to be empathetic about all audiences. And what is the thing that is going to be their biggest pain point? What's going to be their barrier? And that's precisely how we design our programs with the studio, right, in mind. We certainly think about our corporate partners in Japan, but that's not a one-way street. It's not like we're taking 99% of our influence from them. Like, at the end of the day, the IP that makes these programs work, yes, our corporate partners play a huge role in that. But if we don't have the right startups and we don't have the right members of this leadership circle or mentor community, these programs don't exist, right? So the reality is it's a very kind of push and pull. And I think you need to be extremely understanding of those audiences. That to me is the bottom line. Second is, you need to be addressing real problems and real pain points. Somebody at the MBA always used to tell me, ideas find money. And it's so true, right? Is ideas find money, but good ideas, ones that actually impact people's lives and make them better, find even more money. So that's kind of that second piece. And then the third piece, I hate to say it, but it's relationships. And I know that sounds so cliche and so overused, but like, if you are kind of, lukewarm on a certain industry because you don't have the right relationships, well, go find somebody else who does. Because at the end of the day, that does matter. I can't overemphasize that enough. And so we try to infuse the value from our relationships and many times into our portfolio and the other companies that we support. So that's how I look at it. I know that's, I hate being on a soapbox. That's not my space, but
one thing I have to agree with you is so much of it is not rocket science. You have to come up with a good idea.
If this idiot right here can go figure it out, right? I mean, it just shows that like we're in pretty good. We're trending the right way. But at the end of the day, you can compensate for intelligence in a lot of different ways. Okay, and there are different forms of intelligence. And you're absolutely right, 100%. There's not a particular kind of playbook for an entrepreneur, as you know.
Yeah. Michael, look, amazing. Thanks a lot for your time. We're really happy that you accepted our invitation there. There are a lot of great takeaways. I loved how you talked bluntly about certain realities of the sports ecosystem because we're all in it. And, it's an important notion to know that some things are dysfunctional, even though we're still in it. That means our passion is still driving us to try to bring that little bit of change into it. So thank you very much for being here with us.
Yeah, thank you for having me. Hopefully this isn't 60 minutes of people's lives they're never going to get back.
Thanks, Michael. Thanks, everyone. Hope you appreciated it as much as we still love doing our little corner episodes. As you know, this is our new international channel. So if you can go under ratings and go on Spotify, Apple, give us good grades if you're enjoying it. We love the support. Thanks, everyone, and talk to you soon.
Le corner.